Hey there everyone, welcome back to the channel. Andy Cassidy here, Cassidy and Associates Real Estate. Today I'll take you guys along with me inside of my $10,000 brokerage account. Now I am no expert with stocks. I'm definitely not as comfortable with stocks as I am with real estate. The money that I put into this account, I'm fine with losing it. I understand it can go up or it could go down. I'm not emotionally attached to this money, and I'm just trying to diversify here so that if I were always invested into real estate and real estate crashed for whatever reason, I don't have all my eggs in one basket. So with that being said, let's take a look into my stock portfolio. All right, so now that we're inside of my stock portfolio, you may see that on the top, I have blacked out part of my username. That way, you guys can still see enough so that you know it's my account, and I blocked out enough so you can't see my full username. Now, the first stock I ever purchased was Apple. I bought this the first month I turned 18, and when it came to stocks, I wasn't sure where to invest my money, or how to invest my money, or how much money I wanted to invest. Whereas I was comfortable with real estate, I had knowledge, I was comfortable on that side. But when it came to stocks, I wasn't as comfortable. So I asked my brother and he recommended Apple. So that was the first stock I ever bought. Now, as we can see, I'm up 67% overall since I purchased that, and I'm happy with that number. I do want to purchase more Apple as time goes along, but I would like the cost per share to go down before I do that. Now, the second stock on this list is Abbvie, and they are in the pharmaceutical industry, and that's exactly why I bought them. At the time, it was the only pharmaceutical stock that I had, so my plan for buying it was that it helped me diversify and it paid a dividend. And I had seen some other investors that I trusted invest into them, so I felt pretty comfortable going in. Now, I currently own 5 shares, my purchase price being $67 per share. And over time, since I've bought those 5 shares, I'm up 43%. Now, the next stock up on the list is Caterpillar. And to be 100% transparent and truthful with you guys, I don't have a great reason as to why I purchased them. And compared to the rest of the portfolio, I don't have that much money invested with them. I currently have $256 with them, and I'm down about 6.9% with this stock. And as of right now, I don't see myself wanting to purchase any more of Caterpillar. And once I break even or get a little bit of gain, I'm hoping to eventually sell out of them and reinvest the money I earn into a different company. Chevron is the next stock up on the list, and Chevron is my second biggest loss. Right now I'm down about 30% total with Chevron, and I have 5 shares of them. Not my most happy stock. Once again, once I break even or gain profit, I'm going to sell out of this. Not a big fan of their company, and honestly, not very happy with the investment I made. The next stock up on the list is Enbridge. And a lot of you may not have heard of Enbridge, and the reason being is that they are Canadian based. And the reason I originally purchased this stock is I didn't have any stocks like it. It's one of the only stocks I have that's non-US based, and I wanted to try and add some dividends to my portfolio. So that was the main reason I looked into Enbridge. Right now, I'm currently down on my position. I am down 23%, which is quite substantial, and I am glad I get dividends from them, but I don't see my position growing at all. The next stock is Johnson & Johnson. Very famous company. A lot of people are familiar with them. They're notorious for being great at paying their dividends, paying on time, and increasing their dividends. So right now with Johnson & Johnson, I own 5 shares. I'm up 6%, so it's nothing huge. And the funny story is a lot of investors say not to be emotional when you invest, but my mother used to work at Johnson & Johnson, so I kind of just bought it. I didn't really care if it went up or down, but I kind of just bought it. Makes me think of her, and that's why I bought that stock. Next stock on the list is KMB. Now this stock I've barely made any money with. I'm only up 2.81%, which is quite dismal. It has been very neutral for me ever since I've held it. Haven't seen any jumps up, haven't really seen too many jumps down. It's just been quite average, which I personally have liked that with this stock. It's kept some consistency to my portfolio, and I plan on holding them. They do pay a dividend. They seem to be, since I've held them, very neutral, and for that reason, I'm gonna hold on to them. Next stock up is Lowe's. Now Lowe's, I don't have many shares. I only have 2. But I am up 29%, which is pretty good, pretty high. And I do regret not purchasing more shares when I first invested into them. And looking back on it, when I did first invest into them, I thought to myself, later on, I'm probably gonna regret not purchasing more shares. And sure enough, I do regret it. Don't regret it too much though. I mean, I wouldn't have made that much more money, but I do regret it a little bit. 3M is up next. Now 3M is a stock that was one of the first ones I purchased. It is one of the first business models I began to understand, read, and learn about. So right now I have 4 shares, down about 10%, but even though I'm down, this stock has taught me a lot. I've learned a lot. I've learned a lot about how to look at companies and how to value companies, to see if putting my money into that company is a good idea. Although as of now, that stock hasn't worked out necessarily. I am glad I purchased it. I may still add to that stock in the future, but it really helped me get my feet on the ground and get the ball rolling and start learning how to invest into stocks. So this stock is, I guess on a sentimental level, one of my favorites, but as of right now, I am down 10%. The next stock up is a stock I've made a crazy return on. It's the stock I've done the best on, and the stock is Nvidia. So right now, I currently own 3 shares of Nvidia, and with that being said, with only owning 3 shares, I'm up $775 just from 3 shares. I originally had 5 shares of Nvidia, but I did sell off 2. I sold them for about, I wanna say $100 or $120 profit, which at the time I thought was good, but looking back on it, I wish I would have held them, but I did profit off them a lot, and I'm really happy with how I've done on this stock. The next company up that I own is Realty Income Corporation. And I know for my loyal viewers, very much appreciate you guys by the way, that you've heard me talk about this company before. And Realty Income Corporation is a REIT, so by law they have to pay 90% of their taxable income to their shareholders. So each month I get a dividend from Realty Income Corporation. Right now I own 17 shares. It's about $970 worth of shares, and I'm down 15%, but I'm a big believer in this company. I think they'll bounce back. I think I'll have a profit on them. I probably will put more money in them in the future. I could be wrong. I don't know, of course, but I do like this company and plan on putting more money into them in the future. Next up on the list, we have Procter Gamble. Now, a lot of investors consider this to be a safer stock compared to a lot. It's been steady. Right now, I am up 5.5%, nothing crazy, and I didn't expect anything crazy with this. What I thought I was gonna get when I purchased it is what I got, so I'm pleased with that. It's been a staple in my portfolio. I've had it almost since the beginning, and I will add to them, not too heavily, but I will add to them, and I'm happy with how I've done with this company. AT&T will be the next stock that we're gonna talk about, and my thought process when I originally purchased AT&T was that I was doing it more so for the dividend. Now, AT&T has proven to pay out dividends, and they have a pretty high dividend yield, and I saw this yield, I was attracted to it, and I thought I was gonna take advantage of it and get a good dividend from this company. And although I have gotten dividends from this company, I am down 12%. Nothing too substantial, but that's just how it played out. Will I put more money into them in the future? I'm not sure yet, and I'll have to consider. The next stock up is the stock that I am down most with. Now, this stock is Wells Fargo. This is the only bank I own. I'm down 32% on them, and when I first bought in, I thought it's a bank, it must be pretty safe. I was wrong, down 32%, my biggest loss. I've learned a lot from this stock. I've learned not to get frustrated when you see your shares drop in value, not to panic sell, and I'm just gonna hold. I hope and I think that in time, this stock will break even or I will gain money with them. So that's my plan with them for now. Wynn Resorts, big casino, that's the stock up next. Now with Wynn Resorts, I am up 46%, and I bought Wynn when it was really down, almost when it was at its bottom in recent years. And I don't plan on adding any more Wynn to my portfolio, but I did win with that purchase being up 46%. Lastly, we have YYY. And what this is it's an ETF that focuses on dividend paying companies. And that was my whole reason for purchasing it. I was attracted to that dividend yield. And what I've learned throughout this process for myself personally is that I shouldn't be too attracted to dividend yields, and I should focus on how well the company actually is as a whole and not get distracted by that yield percentage. Thank you guys for watching this video. Hopefully you learned from my successes and my failures with these different stocks. As you can tell, I'm no stock pro. I'm trying to learn more and more as I go, and we'll see how much I put into my portfolio moving forward. But thank you guys for watching. Make sure to check out the different playlists we have here on the channel. My favorite is Make Wealth Through Real Estate, and new videos are coming Tuesdays and Saturdays, and make sure to subscribe.
Booth, stop playing with them.